at Dukascopy HQ as Japan posted its third consecutive economic contraction, and GDP data for the Eurozone highlighted its worst performance in over 4 years. Japan's GDP data released overnight detailed an unexpected shrinkage in the final quarter of 2012, as lagging exports and business investment failed to outweigh a 0.4% quarter-on-quarter rise in private consumption. GDP contracted an annualized 0.4% following a revised 3.8% fall in the previous quarter, according to data released by Japan's Cabinet Office. This result strengthened Prime Minister Shinzo Abe's case for stimulus as Japan's lower diet passed Abe's fiscal stimulus package today, and BOJ officials raised their assessment of the economy. While the benefits of a weaker yen and rising stocks are yet to be felt, observers remain optimistic, with one economist commenting, "These are pre-Abe numbers. He was only Prime Minister for about the last week of the quarter. We will see a fairly big pickup this year, led by exports recovering on the weaker yen." Over in Europe, Germany, France and Italy experienced larger than expected declines in GDP, contributing to a Eurozone GDP contraction of 0.6% in the fourth quarter of 2012, signalling a deeper recession within the bloc. Leading the fall was Germany. Data released Thursday morning showed the economy contracted more than forecast in the fourth quarter due to a decline in exports. GDP fell 0.6% from the third quarter when it gained 0.2%. While Germany's Bundesbank lowered its growth forecast for 2013 to 0.4%, it does appear Europe's powerhouse is already rebounding from its fourth quarter slump, with business and investor confidence rising above expectation in January and an unexpected drop in employment. Unfortunately, the same cannot be said for France, as a 0.3% drop in quarter four GDP suggests that President François Hollande is struggling to keep France out of recession. Today's data marks only the second time since the first 3 months of 2009 in which French GDP has declined. A note by JP Morgan Chase to clients stated recent macro data suggests that France may be about to significantly underperform the rest of the region. While the rest of the region looks to be stepping up to the start of the year, France looks to be stepping down. Mr. Hollande is now in a race against the clock to reduce joblessness and exports and boost manufacturing by the time his mandate runs out in 2017. Italy brings up the rear on this disappointing data, showing a larger than expected decline of 0.9% just weeks ahead of a national vote. The euro extended its losses against the dollar in the wake of today's data, with European stocks also declining. That's all from me for now, but stay tuned to Dukascopy TV. Thomas Taplin will be conducting an interview looking at the ECB monthly report, while Jennifer Cordingley puts gold in the hot seat for today's Commodities Corner programme. Don't go away.